It's Tuesday, that means it's Trading Tip Tuesday. Gonna talk about divergences today. Bit of a nebulous subject for some, I think, because oscillators are difficult for a lot of people to understand. Oscillators are often misunderstood. Oversold, overbought is misunderstood frequently. So let's talk about the cheat sheet. Let's talk about some examples. Let's talk about how we can front run a divergence to try to predict where price would go for a buy the dip or buy the sell opportunity. So what you need to figure out if there's a divergence is have the mindset that if price makes a higher high, we're talking a local high, significant high. If price makes a higher high, there's an expectation that momentum, which is what oscillators measure, should also be higher. If price makes a lower low, the expectation is that momentum should also make a lower low. Where the divergences come in is when we get a higher high in price and a lower high in the oscillator. And I'll show lots of examples of this. That would be a bearish divergence. Now, if we get a lower low in price and a higher low in oscillators, that's a bullish divergence. So those are just the regulars. Then there's the hiddens, which are a little less intuitive. But if you think about it like this, we're getting a lower high on more momentum. That says despite momentum being higher than it was before, price could not get higher. That's bearish. Hidden bullish momentum divergence would be if price makes a higher low on more momentum. That says despite momentum being way more than it was before, price couldn't make a low. Bears tried to sell it down, they couldn't. That's a hidden bullish divergence. And the exaggerated or soft divergences are where you have equal highs or equal lows in price and you get a wacky oscillator momentum, where you get an equal high but oscillator isn't there with it, which makes sense. If momentum isn't as high as it was before, it's bearish. If momentum is higher than it was in the previous low, it's bullish. So these are confusing, sometimes difficult to spot. Sometimes I myself use this cheat sheet on a regular basis because you're thinking, when you're looking for these, you're like, is this a higher high, higher low? Okay, the oscillator is lower high. So that's the first step. Just use the cheat sheet liberally, because for somebody like me, it's just hard to remember sometimes. It's just the way it is, just hard to remember. So screen cap this or Google it and use it. So let's go over some examples. So as with any indicator, anything for trading, if it's appearing on higher time frames, it is extremely powerful. If it's on the 5-minute, more noisy than a signal. If it's on the 4-hour or higher, you could say, okay, this is pretty considerable. I should probably take this into consideration. If it's on the weekly, then it's a big deal. Then it's definitely worth paying attention to. I'm going to start by looking at some daily divs for BTC, USD. Now I encourage anybody who's new to divergences to just pick up a chart, go to any time frame, any ticker, just start looking for divs, back testing, say, okay, here's my RSI, here's my price chart, what can I find? They are much easier to see in hindsight, I can assure you. The trick is finding them as they're occurring. So we'll go over that. Something else I also recommend you do is change your price chart to line over candlesticks, because momentum oscillators in general calculate at the close of the candle, not the wick. So unless you're going to draw from bodies of the candle, it's going to confuse people who are new to this. So just change your chart to line. You'll be happier. It'll be easier to see. Clearly you're getting higher highs here, right? With wicks and stuff, sometimes it's hard to see that. So I said in the beginning, it could be any oscillator you can look at. You can look at RSI, MACD, OBV. I'm going to look at %B in a second as well. I put MACD on here just because for me, it's better to just look at RSI for divergences, because MACD is kind of hit or miss sometimes. And MACD is just too busy for me, okay? There's signal lines, there's histograms, there's different colors. Just give me black and white, above 50, below 50, above 30, above 70, below 70, whatever. For me, it's just much easier to look at divergences on RSI. Not that they don't always appear on MACD. Sometimes they do, sometimes they don't. But I think it's just easier to use RSI. So let's roll back the clock. Late 2018, right? We get this massive selling, kind of in inverse of what we're getting now. Just selling, more selling than you could ever imagine, right? Prices going down to unimaginable levels than where it was mere months ago. Panic ensues with most people. So what do? You go to the momentum oscillators. We're getting lower lows, right? Clearly, lower lows, days and days and days of lower lows. Is momentum also making a lower low? The answer is clearly no here. Momentum made a higher high. So the actionability of this trade is once you put in the lows or start to put in the lows with significant divergence here, which is what this is. This is one of the bigger ones maybe ever for BTC. That says, okay, the bearishness can only last so long. This divergence can only last so long before people stop selling and start buying. That's what it says. Okay, that's how you can think of a divergence like that. You can see on MACD, it's there, but you have to know what you're looking for. You know, with RSI, it's pretty clear. Let's go to mid-2019. We're getting higher highs, higher highs, higher highs for seemingly forever. Months and months and months of just pushing up, right? Arguably, we were getting divergences growing. And this is a great example of just because it's a divergence doesn't mean price can't keep going up, can't keep going down. Price didn't care. You know, usually there's some other influencing factor, but in this case, price didn't care. And it didn't put in higher highs in RSI, that's for certain. Arguably lesser highs. Usually you don't get more than 3. Usually 3 is it as far as divergences are concerned. Something else I'll say, it can cancel the divergence. So let's say we got a lower low in 2018 and RSI all of a sudden spiked to like 10. Then the divergence is canceled because all of a sudden all this momentum shows up with a lower low, and that's the expectation, right? You expect price to have momentum when it's making lower lows. The divergence kicks in when that momentum disappears and price makes a lower low. So similar here, this is a weak bearish divergence right on this high. Another weak divergence on this high. But eventually it's just too much to handle and price will want to reset. Typically what happens with the divergences, when they complete, they'll go back to the 50, the median line. That's a good gauge of, has this divergence been reset? Sometimes it's difficult to tell. Almost always you will see the divergence complete with the RSI or oscillator returning to the median or 50. So again, you can look at these all till you're blue in the face. You can see them all. Maybe you made some dumb trade or you didn't realize what to look for, or you can add this to your list of things to look for. If we fast forward to now, you know, sitting through this is much different than saying, okay, in hindsight in 2019, you know, clearly there was some sort of divergence here, not significant, but there was a divergence there. Arguably the same thing is the case now. Now this RSI can stay overbought for an extended period of time, right? If we look at the weekly BTC chart in 2017, it was just surging above 70 the entire time. So it doesn't always reset, but as we get higher highs, this isn't maybe an obvious bearish divergence on RSI, but it's definitely making lower highs on RSI. Momentum is waning here. So there is a growing bearish divergence is what I would call this. On MACD, it's more significant on the histogram here as far as being able to see it. So MACD and RSI have their strengths and weaknesses. I just prefer RSI. So if we look at some let's look for some hidden divergences. If we look at 2016 through 2017, every single buy the dip opportunity was a hidden bullish divergence. Price made higher lows on more momentum. And eventually we go from significant hidden divergences to weak hidden divergences. So again, this is something I'm looking for now as far as what to expect in a buy the dip opportunity. And once again, MACD is kind of mixed as far as what it's showing and what you should be looking for. That's why I just prefer RSI. If you look at percent B versus RSI, if we pop on Bollinger Bands, which is the 20 SMA and then 2 standard deviations above or below that SMA. Percent B says how far above or below that SMA are we? How far out of the B bands are we? Again, you can think of it as if we're making lower lows, but we aren't deviating 2 standard deviations out of the Bollinger Bands on the second low, then there's a divergence there. There's weakening bearish momentum. Here, you can very clearly see in 2019, definitely weakening momentum. So if anything, I like to use RSI with percent B to look for divergences. If there's a divergence on both, super convincing. If there's a mixed divergence between the two, a little less of the case, obviously. Just have to judge that appropriately. But again, you get continuous divergences, the same thing. Some people prefer percent B over RSI. So currently, there's a case to be made again for bearish divergence on percent B. Another way you can think of this is it's riding the band, much like it did in 2019. So right now, there's no convincing case for bearish divergence. I'll make that clear. it's not as obvious as it was in 2018, right? We're not seeing this pop high with no momentum. We're not seeing that. And again, if you look at %B with the hidden divergences, same thing. Very clearly there, you're getting higher lows on more momentum. Higher lows, more standard deviations away from the mean each time. And they slowly weaken out and then eventually don't occur at all. And if you look at the daily ETH, same story. You're getting bearish divergences, bullish divergences, exactly where you'd expect them. RSI, %B. The case for the highs here, the divergence, certainly fairly strong in 2019. Not the case here, right? We haven't really gotten higher highs. That's the other thing. People like to look for divergences when there's no obvious high. There's no obvious higher high. Even here, this is one I could clearly show. You're getting 3 highs here, right? And RSI is not on board with that. Momentum is just not there. This is a good example of an exaggerated divergence again. Easy to do in hindsight, harder to do as it's happening, but something that you should always look for. So if we use that buy the dip opportunity principle for hidden divergences, hidden bullish divergence, what do we expect as far as a buy the dip opportunity potentially if this acts like 2017, 2016? Well, it would have to be below, not necessarily below the Bollinger Bands, but below where the Bollinger Bands sat on the previous low. Now this is just a rough estimate depending on how this looks in a couple days, but it's something that you should pay attention to, because if RSI breaks below 30 all of a sudden, but we don't make a lower low below 10K, then that's going to get gobbled up, or that's in the process of getting gobbled up. So hopefully this is helpful. These become more intuitive and obvious the more you use RSI with price chart, the more you use the line chart, but you definitely have to actively look for them. They occur extremely frequently and are a good gauge of general sentiment when trading higher highs or lower lows.